Let's build a chart up using some daddy levels, shall we?
Wait. Matron, take them away.
And a warm welcome to one and all. And what we're going to do today is, I'm not really going to ask about like what I normally do, because I actually want to show you something, and I'll kind of talk through it while I'm playing. But if the criteria is there, I'm going to put a trade on as well. Now, one of the differences with this channel against most others is I don't do rollback charts. I don't believe in them. And as soon as you see somebody on TradingView saying, I took this trade earlier, well, all I'll say is it's easy to trade if you know what the outcome is. When you see it on here, I've got no idea what's going on. None whatsoever. You see it play out the same way I see it play out. And why do I do it that way? Because it's my job. It's what I do for a living. So I have to sort of follow this process. And also, I think it's a bit unfair. And certainly in an industry like this, I mean, at the moment, there is a lot of people trying to imitate me with my style of the way I do things. There's certainly imitators on Twitter and everything trying to use my name to rip you off. So be very careful about who you follow. Message me. I always message you back. And I'll always be able to verify it's myself. But what I'll say on that score is I'll never directly message you. I'll never ask for investment, and I'll certainly never sell a signal. So if you've got any of them three criteria, it ain't me. So just be a bit careful in this mad world that we're in. So, daddy levels. Are you interested? If so, hit the little subscribe button. Genuinely helps and motivates me to do more. And if you really get value out of it and you want to help support the channel, smash the like button, drop down, see the merchandise shelf, maybe just get yourself a Forex mug, or if you want a wage maker, there's details of that in the description below. So what are we doing? Well, let's have a look, shall we? Well, my chart of choice is pretty much always cable, you know. Now I'm going to strip this off so it's completely naked. All right. And what we're going to do is we're only going to use what's called daddy levels and granddaddy levels. Now, if you're unfamiliar with what they are, if you go through the channel, I've done a number of videos on this. Now, a daddy level is a level from the day before, okay? And it's the high, the low, the open, the close, and the center line, okay? 5 pieces. We can also have a weekly level from the week before. Let me show you. So if I open this up, there's the last week, okay, here. Now these are quite important. So I'll drop them in different colors just so we can sort of see what they are. So we'll make these ones orange. So there's a low, there's a close, an open, and a high, just like so. But we also want to be able to see whether we're trading in the lower half or the upper half. And that can help with bias. So that is there, but we're going to change that just so that it's like a dotted line right through. In fact, I'll make it into that, but really thick. Okay, so we can see the makeup of that. Now, if I drop this down into a daily, we want to see what happened on the last day. Now, this is this day. Okay. So I'm going to do the process again. Now, I'll change the color of these so we can tell the difference between them. Put these in black. I'm going to do exactly the same process. Just like so. Oops. Sorry about that. Didn't click it correctly. We can fix it. Just like so. Okay. And we'll do the same with that. Okay. What have we got? What are we looking at here? Well, straight away, we know we're trading in the lower half because we can see it. There's the center line of the weekly. So we're trading below that. And we're looking to get to its lower point, which is here. So if that's the case, that could be a bias just for today. Because we can see that it's red, pushing down. We can see it's already visited this level and this level. And it's cracking through, but it's still holding under the center line of yesterday. So again, confluence to the downside. Look at an hourly chart. Start looking at this little bad boy. See what's going on with this. And again, we can start seeing what's going on. And then there's the gap from last night. Well, it's come down to fill that gap. It's touched that. But the question is it going to continue this journey? Or is it going to try and retrace on itself? That's what we're going to try and figure this out. So we can use a little bit of a fib. So there's a fib retracement. We can go, right, okay. Well, there's a fib on the hourly chart. What's it telling us? Well, we're going to draw in some levels on this. But these ones are all sort of entry-exit levels. Okay. And we're going to build up a criteria. Okay. And I'll explain why this fib is where it's at once I've done these in. Okay. Right. So there's a map chart. Now, if we look at this, this is the last completed leg that I can see in the chart. Definitive high, definitive low, and the price hasn't breached either of them. So it is playing in this arena. Okay. That arena is held between that level and this level. So that gives me a maximum trading arena. But that's the weekly. Quite far out. So I need to drill this down a little bit, and that's where this fib comes into it. It tightens up that arena into solid chunks that I can see. So now on this 15-minute chart, I can see clear levels. I just need to figure out whether or not I want to go short or long in this next hour period. Well, looking at the makeup of the chart, I would say it's predominantly to the short side. It's pushing down based on those daddy levels. Why? Because it's holding under the center line of each. You know, center line here, center line there. Now, each of them represent sort of pivot points. Well, it's been up and it's tried to get there and it's collapsed and it's come away. It's come under the 50 of the daily. Let me just, what I'll do is I'll make these purple like so, just so you can see it, and you can see the other one here. And do that. Well, what we'll do is we'll make that one green, just so we can tell the difference between them. So as long as it's holding underneath that, then it's a reasonable assumption that this is to the downside. We've had a solid drive down, weak push back up. These kind of concern me a little bit because it's just showing the fill of the gap. But let's get a little fib onto this as well. But what we're going to do with this one is, I just want to see where the center line of that is. Well, the center line is there. There's the 38. So this is like a good area of attraction here. Now, if I turn this upside down, or put an extension on it rather, Fibonacci extension, that is from there down to the lowest point that it's already been, which is here. I want to have a look. Well, what do you know? That extension lines up perfectly with this fib line. So what I can do there is put another line there, which is an area of attraction, and there's an area of attraction. All right, I've got a chart built. See exactly what I'm doing. You know, is it good enough to trade? Well, let's have a look. Well, there's the drop. We can see it a little bit more cleanly now. We're on a good point where we can enter the market. So let us have a little look, see what we are like. Would I enter this just now? Maybe not. A little look. Push up. No. I would say there and there are good entries. So if I wanted to leave this, just drop this down to 5-minute chart. Let's have a little look, see what the makeup of this is all about. Pushing up, so that's a good solid level. Lines up with a cluster, so we can have an entry here, here, and here. Maybe it's even, yeah, probably about there, I would have thought. So if I just drop in a sell order, just put it up the top there, up the way. And what I'm going to look to do is put an order there, just like so. I can put one here. I can also put one there if I so wish. But what I'm going to do is, I think that's the key one at the moment here. So I'm just going to let the price move up. When it gets into this zone, I'll put an order there as well and see which one it triggers first. Whichever triggers first, I'll just cancel the other order off and then manage it out. But that's a map chart using daddy levels. So let's see if this plays out. If it does, brilliant. If it doesn't, no worries, I'll come back. But at least it's set up in such a way that it's logical. Okay, hope that helps. Catch you in a bit. Okay, guys, let me just flick this over. Just stop me out because I was trailing the stop. I've been a bit aggressive today because it's really a bank holiday and it's quite quiet. Fancy a bit of time off this afternoon, but I wanted to show you this in action. Now, basically what I've done, just to sort of recap, if I widen that out a little bit. Each one of these levels, it's key points. And as you can see, they're respected pretty much bang on, you know. Even the fib lines that I put in were pretty good. Now, I wanted the price up here. Didn't quite get there. Then it dropped away. And I thought, well, if the move is starting, well, let's capitalize on it. And I had orders stacked, ready on each line. Because ultimately, that's what the lines are for. You know, the areas of interest. Now, you hear the sort of terms all the time in this industry of supply and demand, you know, gaps, all these different things. ultimately the price will do one of three things. It's going up, it's going down, it's going nowhere. Do you know where these orders are clustered? No, you don't. And don't for a second think that you do, because you have got zero idea where the orders are. But what you have is an idea where they are. Two different things, you know. And I watch the channels all the time where they go, oh, yeah, there's a liquidity pool here and a liquidity pool here. And we're looking at a downward trend and we can see where the order blocks are and all of this. Do you work for Goldman Sachs? Do you work for Barclays? Lloyds? Do you actually know where the institution are buying? No, you don't. What you have is a fair idea. And to me, that's just all psycho babble. It really is. And it's why I'm possibly not as well liked in the industry as some others. Because I'll tell you the way it is. You know jack shit. Absolutely jack shit. All right? All you know is what you see. And that's why I tell you, trade what you see. You know, if it's going down, it's going down. If it's going up, it's going up. Then you've got to understand how and where you're going to place your order. Now, the only thing that you do have are the levels. Why? Because you can see them. You can physically see them. And then you know if they are key solid levels, these sort of things, your daddy's and your granddaddy levels, that there is a reaction there. Why is there a reaction there? Because that is where the big money plays. You know, and how do you know why it's the big money? Because of where those levels come from. The dailies, the weeklies, the monthlies, the 4 hours. That's where they transact business. They're not bothered about an indicator. They're not bothered about Bollinger Bands, RSIs, all of this. They're there just to help you guide a decision. But your decision comes from the chart itself. All right? The price. That price is the best indicator you have. And until you kind of figure that one out, you'll always be looking for the Holy Grail. Now, okay, that went into a trade, hardly went against me. It's been maybe an hour, just over an hour. I started this about 10:10. It's now 11:30. And if you look at the base here, you'll see there's the timestamp and the date. And all right, got no trades left, got no orders running. And that was the trade, 43 quid. But 43 quid for an hour's work, I think ain't bad. Now I can go back into this if I want and grab, say, another 25 quid or whatever using this level here. In fact, we'll do it. Just drop that into there. No, I might be a bit close to it. Yeah. Right, well, we're in now. So we sorted out. I did want it on the blue line, but we trigged in. But we're just going to put a small order in this. Let's just drag that up. So that's about 10 pips. Say you just want 25 quid. There you go. All right. See how long it takes you to get 25 quid. What are we doing here? We're looking to see if it'll bounce through the level, because we've got a key level here that it'll play with. There it is going in now, pushing down. Just get it onto here. 25 quid. I mean, I like about 50 quid out of a trade. Why? No reason than it's a nice round number. That's it. Now, when you're looking at your trades, okay, you're always trying to over-engineer it. You genuinely are trying to over-engineer what's going on. It's this value, it's that value. And you're trying to talk this wonderful speak that, well, quite frankly, doesn't mean anything. You know, genuinely doesn't. I'll say it again. The price will go up, the price will go down, the price will go nowhere. On a 5-minute chart, can you determine what the trend is? You haven't got a clue. No chance. Can you see it on a 15 minute? You've got a better chance than a 5, but it's still pretty dicey. Can you see it on an hour? Yes, you can. Why? Because you can see how far the market is stretching back out. Now with a 5 minute, it's too chattery, it's too noise. It's brilliant for getting an entry, but for actually getting a trade idea, not so much. So as a basic strategy, look at a daily. Try and work out whether the daily is going to close above or below what it did yesterday. That's simple. Right? Well, I think it's going to close below yesterday. Right, that's your bias. Your bias is now short. Drop it into an hourly. Right. What's the hourly doing? Well, the hourly's going up, but I want to go short. Why do I want to go short? Because I've just looked at the daily. All right. So what does that tell me? It tells me to wait. Because if you're going to try and be Billy Big Bollocks and trade the market going up and then the market going down, might look great and you might have bragging rights and everything, but you're going to crash and burn, and you're going to crash and burn badly. Why? Because the day you try to think you're clever, which is what you do in trading both ways on a single day, is the day that'll pick the order up and keep on going the wrong way. And it'll just wipe you out. And then you have to lick your wounds for a little bit and try and rebuild the damage that's done. Now, if you were more conservative and you went into the market with a single idea, single direction idea, that is, the dominant direction. You'll often hear me refer to as the double D, dominant direction, from the high time frames, and then wait for the price to move up into that level, and then get triggered in and catch your trade coming back. That's a lot safer. It's a lot more sensible because you're going with the flow, you're going with the idea. And what that'll do is you can actually reduce your investment somewhat, because you're waiting for the optimum point. And if you're reducing your investment by nature, you can increase your upside or not have the chart work as hard as it was. And there we are, that's dropping into place just now, following that exact same principle. And that's it. All I'm doing here is letting the chart work itself. So that hits 25 quid. I'm quite happy. Why? I'm not greedy. Get in, get out, get paid, go about my day. Is that not an easier way to trade? Tell me I'm wrong. Drop it in the comments below and sort of explain where my holes are. But I'll explain where my knowledge comes from first. I do this full time as a living. I have done for a long time, and you see me do it pretty much every day on this YouTube channel. Every day, come to market. I run a small group called the Scruffy Squad. I tell them what I'm doing before I do it. I don't have a crystal ball, but I put my head on the block and say, right, today I'm trading cable. This is where I'm going. And that's it. I can't be any fairer than that. And there's a trade straight in front of you, 25 quid. Doesn't sound a lot, but it's just boosted that up in a couple of minutes following the price transaction, or the price action rather, that I had a belief that it's going to crack that level and push down somewhat. And that's exactly what it's done. I can't be any kind of fairer or simpler than that. Wanted 50 quid in the hour. It's done 68. Okay. Happy days. Happy days. So there you go, boys and girls. Daddy levels. Very important. Structure your chart. Follow your plan. But more importantly, stick to your conviction. If you can stick to your conviction from a plan that you've got predetermined, it makes the trading so much easier. I think that's about as simple as I can get it. So if you want to see more, do all means drop in the description. You'll find all my contact details there. I'm very easy found, and I genuinely answer every single person that contacts me. I contact loads of other YouTubers. I wanted them to maybe come on the channel and things like that. Have a little chat. Never ever respond to me, ever. You know. But then I got my wife to do it about a month ago, because I've done it in the past as well. So just email a few of them and ask them if they'll teach you how to trade. Within 15 minutes, they get a message saying, yeah, join this, that, and the t'other. Proof's in the pudding, guys. You know, I'll put my head on the block and I'll do it every day. So there we go. Can't be any fairer than that. So as always, guys, trade well, keep your risk managed, but above all, do what you love, and the money will follow. See you all on the next one.